Highest weekly close in 5 for gold bullion, but ETFs shrink as Google, inflation, searches fall from record. Gold bullion slipped and then jumped versus all major currencies on Friday, heading for its highest weekly close in 5 despite further outflows from ETF investment funds as world stock markets also rallied on strong U.S. economic numbers, making a stark contrast with weaker data plus return of COVID restrictions elsewhere. Priced in the dollar, gold bullion traded at $1,823 per ounce ahead of Friday afternoon's London benchmarking auction, the highest weekend level since the 11th of June. Retail sales in the world's largest economy jumped 1.3% last month from May when excluding sales of autos, still hampered by the shortage of microchips worldwide. After China's first GDP estimate for April to June came in weaker than analysts' forecast at 7.9% per year, yesterday's data also said the UK's jobless rate failed to fall from 4.8% on June's reading. The Bank of Japan today cut its 2021 GDP forecast to 3.8% growth, down from the 4.0% projected in April. But while U.S. industrial output grew less quickly than expected on yesterday's figures, up 0.4% from May, U.S. export prices still set a second consecutive all-time high last month, rising 16.8% from the same time last year and second only to May's record annual rise of 17.5%. Data from Google Trends says that U.S. Internet search volumes for the word inflation have fallen back since jumping in May to a new record on the tech company's 17-year series. So-called break-even inflation forecasts in the bond market also peaked that month. The U.S. has the highest inflation of the developed world, says analysis from Nikki Shields, head of metals strategy at Swiss refiners and finance group MKS PAMP. Even if the Fed insinuates that CPI x food, x energy, x goods, x restaurants, x rent, x lodging, restaurants, x travel, x services, x anything, is 0%, the data speaks otherwise. Even excluding all transitory items, inflation is the worst in 3 decades. Despite this week's inflationary U.S. data, Thursday however saw the number 2 U.S. gold-backed ETF, the IAU product, shrink for the first time since start June, reducing to its smallest size since mid-May. The larger GLD Gold ETF meanwhile held on track for a 0.6% weekly outflow, its 4th decline in a row. "We are seeing a lack of buying interest from ETF investors," says one bank analyst of gold bullion demand. Chinese wholesale demand for gold bullion turned positive on Friday but only weekly, with the premium in Shanghai over London quotes moving up to $1.20 per ounce. Barely 15% of the typical incentive for new imports to the metal's number 1 consumer nation. India's consumer demand was meantime slowly recovering after state governments eased lockdown restrictions, but the sudden rise in prices disrupted the recovery, Reuters quotes a wholesale dealer in Kolkata. For the wider economy, the outlook is highly uncertain as domestic and overseas economies could be swayed by developments regarding the pandemic, said the Japanese central bank today, holding its negative interest rate and unlimited QE policies unchanged.